right, wait, crap, I gotta figure out my line too. What are we talking about today? The best of the Bitcoin Miami process is now the best time to buy Bitcoin, and U.S. Treasury is broke. U.S. government is just as broke as you are. All this and more in today's blockchain basement. It's working, dude. Alright, wait, crap. Our mics are going through too, by the way. Welcome into Blockchain Basement. On today's episode, we're going to talk about the best of Bitcoin Miami 2023. Is now one of the best times ever to be buying Bitcoin, and U.S. government is just as broke as you are. All this and more on today's Blockchain Basement. Bum, 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 bum. You ready for this? I'm ready. Welcome.
If you're going to screw me, at least pull my hair.
Hell yeah. What you got?
They could start chopping off fingers. They're like, give me your seed phrase, but I don't know it.
Out to give the numbers out. And I was like, no, hang up the phone right now.
Or like when it dropped in 2020, was it like exciting?
400,000 to 600,000. The generational signals are now.
Level. So I don't even know if we're going to get back below there. But if we do, that's kind of where we...
All right, welcome back, basement dwellers. Long time no see. We definitely missed you guys. We're gonna have a really good show for you today. We've got Kelly Kellum here, the Nictator, the lovely Allie Lee, and Drew on the board saying hello, and as well all of you guys: Mike Olin, SAS Finance, Rand San Miguel, the Deadwood, Solar Mining Spain, Bearded, Kinu, Jim Scott. This is the Bitcoin Way, Dago, Crypto JPM, Solar Miners Spain, John Foster Crypto, Mike Olin, the Deadwood, and many more. We miss all of you guys. Quick shout out to the Nictator himself. I'm glad he's here today. I haven't even had a chance to talk about this. That clip of him and Hannah talking about Liquid Death has just gone super viral on YouTube. Everybody hates you guys, so you know there's that. But hey, it's gotten a lot of views to the channel. The subs absolutely blew up. We've gone. We don't need that right this second, Owen. But oh no, it's okay. We're already live, so we can't switch that right now. Sorry, they were gonna change a tripod for us, but yeah, super excited. Subs have been blowing up. We got a really cool thing we're gonna be announcing this week. A little NFT thing. I was hoping to do it before 10K subs, but we were out in Miami, Bitcoin Miami, all last week. Had a really good time out there, and while that clip was just running, more and more subs piled in. So I guess we'll have to do it before 12K subs. But we're gonna do a little special OG NFT for all of the early subscribers and early supporters of the channel. So that way, you know, a year from now, 2 years from now, you can show us that NFT. Be like, hey, I subscribed at, you know, sub 12K. We might do some fun little things there. So yeah. So hey, TJ, Nictator doing what he does, hurt people's feelings with your opinion. That's right. Hey, he doesn't hold any punches. You know, either you love him, or you hate him. And sometimes you do both. But
This is the Bitcoin Way said, is the basement on Twitch today?
The basement is not on Twitch today. Unfortunately, today is the end of streaming that show on Twitch. It's a sad day. We started on Twitch. We did it for years and years. I'd say probably year and a half, 2 years. Built that channel up. Never really went anywhere. When we talked with the Twitch leadership and the team, they didn't really have any kind of direction for where Twitch was going for content creators. So, you know, everywhere we put our stuff obviously takes effort, takes energy, takes time. So we're really going all in on the YouTube channel here. We will still be doing Twitter and some other things as well on the Blockchain Basement channels. But really for this show, it started as exclusive on Twitch. And then that program kind of ran its course. And now they don't want simulcasting. Unfortunately, they don't want us to simulcast. They want us to choose YouTube or Twitch. So, you know, we're going to choose YouTube. But it is what it is. I'm sorry for, all of our Twitch loyalists, the people that we found there. I know,
we love you guys.
Chemistry Bro, Juggy. I know a lot of you. I know Corey Harden. That's probably where we found you guys. But if you can still support us on the YouTube channel, that's where the content's going to be. And of course, Instagram, Twitter, clips, all that sort of stuff. So that being said, it was crazy week last week. Lots of fun in Miami. The volume is completely dead, which we will talk about and get to. I want to talk about the Ledger situation a little bit. It's a little bit old news, but I do think it's important. We do have a little alpha at the end. Yes, we can get better emojis for the Basement Show now. I am going to work on that. Setting up the membership stuff on YouTube, I haven't really played with yet, but that there will be maybe a tie-in with that with some of those NFTs. Trying to figure out a way to make it cool, but we will be doing some of that sort of stuff. So real quick, we'll kind of go around the room. All of us here were in Miami all last week. We had a whole crew down there, had the Airbnb set up. We were doing around the blockchain. Nick was hosting it in DZ's place. DZ and Taco were at VCon. So had a lot of fun down there. I don't know, had 15 plus people. So Nick, what would you say number one highlight of the show? Obviously this year a lot smaller than last year, but still, I thought it was a pretty decent conference. What was your take?
The highlight of the show, as far as like a speaker, just like my overall experience.
Yeah, just what did you enjoy? What would you, like if you're talking about it, overall, what, was it meeting people? Did you see a really cool booth? Would you hear a really cool talk? Was it just the general conversations? I know you went to the RFK thing. How was that? What did you like?
Yeah. What I liked, I mean, it was really fun. I actually had two people from across the conference. They're like, Nick Tater, and they were like one of my subjects. So that was pretty great just to meet the plebes live in person. So, and just like seeing the whole crew, and there was like a couple of Blockchain Basement fans down there, and that was fun. But then also just having FaceTime with the other crypto influencers and people that like I make fun of on Twitter and that I don't make fun of on Twitter. Like all that was great. The booths were kind of mid. But the art exhibit, actually, the whole Pepe and Ordinals exhibit, I thoroughly enjoyed that. The speakers were good. Tulsi Gabbard, my wife, she did a great job speaking. RFK is great. I'm bullish on RFK. As far as people who are running on the Democratic ticket, there's literally only one person you can be bullish on, and that is RFK. Yeah. So. But I mean, yeah, this was all the cold wallet merchants sold out like the first day. Yeah. Everyone's dumping their ledger. And you really get to see like who the people who are going to be long-term are. That's the big takeaway.
Well, and that is something nice. In bear market years, you always see, the people that have been here for a while, people that are taking it really seriously, people that aren't just here for the pumps and the price. There's a lot of obviously washout of a lot of different companies. So even though 2022, the price was crashing, you got to remember a lot of these plans are made 9 to 12 months in advance. So the budgets were 2021 budgets, all-time highs. It was very huge last year compared to this year. But when it's scaled back, sometimes there's less noise. It's easier to kind of see through the crowd. I lost it. Somebody in here mentioned one of the best talks they thought, where did it go? Oh, AYAN says they thought the highlight was the talk about the IMF exploiting poorer countries. That was Alex Gladstein's talk, which we cover his tweets here quite a bit.
I'm reading his book.
Yeah.
That he just
put that out. Yeah.
I finished half of it on the plane. I'm going to finish the other half tonight. It is
solid.
Awesome. It's only like, it's not even 200 pages, I don't think. So you can get through it in like a day or two. It's amazing. Highly recommend it.
Yeah, and then Diego says, Wizards dancing on Bitcoin maxis, the best I saw, crushing them with tech facts. Yeah, Eric, which we will talk about. This is something very fascinating with what's going on with Ordinals. I've got some information about BRC20, which aren't the same as ERC20, but it does start to open up similar problems and issues that Ethereum has been facing in the past. Now are starting to be a potential for Bitcoin to have to, problems for Bitcoin to solve now. So it is interesting seeing the Ethereum devs kind of coming back with the problem solving. Eric has worked, I feel like, on both sides, has a very good understanding of Ethereum and a very strong understanding of Bitcoin as well. So we're going to look at that a little bit later in the show, but that was a really interesting talk. And in my opinion, is very exciting for Bitcoin. It's bringing some new innovation and some new things to talk about to Bitcoin. Unintended, it's kind of an unintended consequence of the Taproot and SegWit upgrades. But it does bring something new, something different, other than just, hey, we're still at it. We're still trying to make more rails. Lightning Network is still not really doing much in my opinion. So that was an interesting conversation, interesting talk. Kelly, I know you had tons of conversations, met a lot of different people there.
Someone in the chat, Samuel, said, I met Kelly in Miami. What a good dude.
All right. Yeah. So there you go. Samuel in the chat. So, you know what? And I did want to come back to the art thing. I loved the art thing. That was always one of my favorite parts. We're going to be getting some of that stuff from around the office, but, you know, highlights for you, Kelly, people you met, talks you heard, like what did you like about the conference, or what did you enjoy last week?
Well, first thing I enjoyed most was, you know, being in the space for several years now on the public facing side of it. It's the first time I really got an opportunity to meet so many different people on both the sides of people that are you know, participating in the community. You know, I went out to dinner with a group of folks that have been you know, in the crypto community with me for the last several years. Tim Warren and I went out, and it was a Crypto Sec guy, Agent Gold, Elliot Locke, Brad Guidell. There's a couple other people that, you know, I've been conversing with and aware of in the space for quite a long time. So it was nice to put some faces to names. Samuel as well, Crypto 420 also. But then I really enjoyed, and I actually thought this was interesting, because how many times have we all heard Crypto Sailor, Michael Saylor talk? And I kind of laugh at, you know, how often he talks and how easy it could be for him just to have what it is that he wants to say, and he says that on repetition. And that's never the case. Every time he talks, he has some different sort of metaphorical breakdown of, that's relevant to the current day and time of what's going on in the market. So I enjoyed hearing him speak again. And what I really enjoyed about what he was really highlighting was, while it did have something to do with the development of services that they'll be offering with MicroStrategy, what I enjoyed about it was this, you know, the framework for companies to realize that, you know, having money on your balance sheet actually ends up being a liability, because that money's not making you money, especially because when we think about inflation and just the cost of holding money is basically more than actually, it's better just to take on debt than hold money in some ways, because you can turn it into the big 3D FPV. You can go stick your foot in your mouth, okay? Because I've talked to you many times, and if you don't know how to invest, then get out of the community.
Tell him.
Yeah.
Tell him,
I think he's such a jackass, that guy. So I'm done with that. He calls me an ADAC scammer because I mentioned a coin on stream 2 years ago and said, if you were to invest in this, it's something that you do under 1% of your portfolio. If you lost money on it, it's because you suck at listening, so get out of here. Yeah. So, sorry, just because he hits me on everything.
Yeah,
all
no,
my
you're good.
socials,
You're good.
Yeah.
Those
So,
people-
other than that, I had a wonderful talk with the Rational Root as well. We were just talking about the divergence of liquidity available in the market, with basically a reduction as we're seeing the halving, but having less and less supply that's liquid on exchange. So we're getting sort of double whammy of supply shock. So I was just wonderful time. And Ben Cowan's party was
dope.
the networking mecca of the world.
Yeah, that
Crypto
was dope.
Banter, Cryptos R Us, Crypto Crow, Tom. I mean, it was everybody
was there.
Yeah, the net worth on that balcony was upwards of $100,000. Yeah.
No, it was fun. It's always fun
Liquid.
catching up with, seeing people from over the years, like you said, Crow, Zombie being there. Many people that have been doing it for a long time. Some kind of new up and coming channels were there, which is fun. Like you said, Rand, Banter, Sniper, Sheldon, Evan Aldo, a lot of trading channels and all that sort of stuff. So yeah, really good time being down there. Like I said, lots of really good talks, lots of really good networking. But realistically, it's in the part of the market where it's getting kind of boring. The liquidity, if you look at it right now, the 24-hour volume lowest I've seen in a long time. If you're looking at CoinMarketCap, 25 million billion, on the 24 hours. It's next to nothing. When we were holding, really 30 had been the lowest we'd seen in a long time, but it usually was around 40 or 50. So really boring market. And I think we're really starting to get into that phase what we experienced in 2019, where the liquidity just went away, and it's going to be dry for probably 6 to 9 months. We might get some little things here and there, but not a lot of real, excitement and activity. It's just kind of the accumulation part. So in my opinion, I still think we're in that range in 2019. Like, we've lost 27. I think we're still, in my opinion, price wise, fading back down to 25. It'll be interesting to see how, those 25.2, there's some key support levels around 25. We'll see how those hold once we get down there. I think we could trickle down there over the next week or two. There's really nothing, like if I saw somebody tweeted like a calendar of all the crypto activities, absolutely nothing going on this week. There's more activities, around the whole world. Amsterdam, anywhere in the world, there's nowhere, no crypto events, nothing. So next week we should have a little bit more activity. We'll have some more FOMC stuff going on. But realistically, I think we are entering the boring phase. We are starting to see some regulation get proposed. And again, there's going to be back and forth and comments, and nothing's really going to get done, I don't think, this year. But I do think we're setting up for regulation to get approved in 2024, right around the time of the halving, which could set us up for a really good move up again. So real quick, we'll come in and peek at these prices. Bitcoin coming in at 26.8. Like I said, that's pretty rough. It was holding 27 for a long time. And it's just each time it gets over there, it's holding it. I feel like it's getting a little bit weaker each time. It's weakening, fading back down. I feel like it's, one dump away from heading back towards 25 at this point. And then Ethereum, a lot of other things follow. Let's see, the dominance 46, Ethereum 19.4. So not a dramatic change there. And Gwei still about the same. So nothing dramatic on the market, some slight pullbacks, but it does feel like we're getting into that boring phase. We got Eric Voorhees.
Wait, I have a question.
Yeah. Oh, real quick before hold that question. But if you guys are watching this right now, if you could stop what you're doing, smash that like button. We need to get the likes up. We've got, let's see how many people. We got a couple hundred people in here, only 50 likes. So
what the heck?
If all of you could smash that like button, we're trying to.
Offensive.
This will help you make your friends rich because they're gonna get YouTube promotes stuff to people within your network that you've liked. So hey, if
share
you want
the
to help,
knowledge,
yeah,
share the love.
Spread the love. But go ahead.
Solar Miner in Spain asked, if U.S. defaults on debt, do you think Bitcoin will ride much higher?
Interesting question. Bottom line, U.S. isn't going to default on their debt. They'll raise the ceiling. If U.S. defaults on debt, stuff goes bad really fast. All these treasuries start collapsing. Things get really scary. They might temporarily, but I think they would, they're just going to raise the debt ceiling and keep it going again. That's pretty much where we're at right here. That's what Voorhees.
They'll probably do a weekend default. Like they will.
Yeah,
they'll not raise
do a temporary shutdown.
Well, they'll not raise it on a Friday. We've defaulted Saturday and Sunday, and then Monday they're like, we raised it.
Right. Or they could, there has been a time when there was a week or so where people didn't get payments and stuff like that.
Well, yeah.
Like checks didn't go out for 1 week or something.
Yeah, and we did default back in the 90s.
Yeah, and so here is, here's Eric Voorhees quote tweeting himself. He tweeted this November 11, 2019, the 10-year treasury rate over the past 60 years. So here, let's pull up the original. He's showing the 10-year treasury rate over the past 60 years, federal government, 22 trillion in debt, each additional 1% rise in the rates, 220 billion in additional annual expenses, 3% rate increase. So this was 2019.
That looks like the
Less than 4 years later, and the federal debt is now 31 trillion, up 40%. The situation is completely screwed and impossible to fix. If you own any government bonds, you are the greater fool. So he's referring to the greater fool theory there, basically saying, I'm holding this now in hopes that somebody else is going to come pay me for it later, except the state of the risk on those bonds today is much greater than it was years ago because the credit reliability of the United States is getting worse and worse and worse. Just to put it in perspective, now this is I love it when people break it down to put it in perspective because a lot of times, even for me, you hear numbers billions and trillions. That all starts to it's all relative, so it starts blending together. But the U.S. Treasury has 57 billion in cash on hand, while the government carries 31 trillion in debt. That'd be the equivalent of an average person having $1,000 in cash and $543,859 in debt. It's a little scary, which it is. But then when I thought about it, I was like, well, that actually kind of sounds like the average American carrying a primary mortgage. They're basically living paycheck to paycheck, have $1,000 in the bank, and they're carrying $500,000 worth of debt. And that's really that's the way that this system is designed to get people to live and survive at this point. They want you living paycheck to paycheck. But yes, I think they'll raise the debt ceiling. That will ultimately turn the printers back on, which it means inflation is increasing, which is technically good for Bitcoin, or helps the price of Bitcoin go up or the dollar value against it go down, depending on how you're looking at it. So.
I just wanted to add too. Scott Melker, Wolf of Wall Street, had posted this.
Shout out, friend of the channel.
And yeah, really smart guy. I really love a lot of the stuff he adds to this space. But he put the U.S. Department of Defense And think about this now, these people that are trying to tell us how we should be spending our money. The U.S. Department of Defense has failed its last 5 audits and can only account for roughly 35% of its spending. The rest has disappeared into the ether. The yearly budget is $850 billion. Seems like, but of course, this goes back to what I'm sure we'll be talking about with Biden a little bit. Seems the wealthy crypto traders are probably a little bit of a smaller problem than it's not this that's causing the deficit.
Yeah, that's what. Go ahead.
Frankie Candles single-handedly tanked the economy because he's a crypto trader.
Yeah, somehow it's very interesting. The phrase crypto trader is floating up into the mainstream media, and it seems to be a scapegoat for that's on the political side of things. He says it in this clip here. Which, did you ever get the audio to work on this?
Yeah, it should.
It should work. All right, so we'll try to play this clip, and it's just another example of like how crypto traders have anything to do with this. I don't know, but they're blaming somehow the debt crisis on crypto traders, and he's not going to agree. And this is all positioning. So here's this clip.
Tax sheets and crypto traders while putting food assistance. I'm not going to agree to a deal that protects wealthy tax sheets and crypto traders while putting food assistance at risk for nearly 1 million Americans. Republicans would accept that there is no bipartisan deal to be made solely on their partisan terms.
Wow.
Yeah, so basically this is becoming more and more political. Like you're saying, there's not going to be a bipartisan agreement. They're trying to make it seem like crypto traders are these big bad guys avoiding all these taxes when, it's a extremely small market when you consider the grand scale of all markets. We've got, let's see, Ray from the gym. Hey, shout out from Ray.
What up, Ray?
With the super chat, given the Durham report and the weaponization of the alphabet agencies against undesirables, what do you think that means for crypto as the my eyes are bad managerial state and current admin oppose it? Alphabet agencies meaning against undesirables. I mean, I think they're going to continue to fight it as we've seen, but it's going to be a very difficult battle for them. They're just trying to get their arms around it. I think once the regulation gets in place this year for big companies that the alphabet agencies have a say and an influence over, I think you're starting to see some of the signs of that showing when it comes to some of this ledger stuff, which I think is really scary to a lot of people to realize that there has always been a potential backdoor within a hardware device that was sold and promised to be 100% end-to-end secure. Somebody else did ask about that earlier. I don't know, Nick, if you've been looking into that, but somebody asked what cold storage wallets people are buying now that Ledger has pretty much said, yes, if the U.S. government asks hard enough, we can access your funds.
I mean, one of our previous sponsors, BC Vault, they're good. I don't really like their UI all that much, but I think it can improve over time. I personally use a Trezor. I've been extremely happy with it. Someone said there's a hardware vulnerability with the Trezor, and that's some FUD that's going around. You have to be physically present at the device and take it apart and put some jumpers on some leads out of the chip. So I guess that's a vulnerability, but if you're gonna do that, you might as well just pull out a hammer and start hitting someone's hand to get their seed phrase, honestly. So I really like Trezor. There's another one that actually had a camera built in so you could scan QR codes for different addresses and stuff. And I forget what it was called. It bothers me right now. If anyone knows in the chat, it looks like an old brick Nokia phone, but it's sexy and it has a camera on it. And it's really cool. So those are good. You can play Snake.
Everybody loves it. Yeah, just to get you guys up.
Fits in a prison wallet.
If you guys aren't familiar with this, I feel like it's a little bit old news, so I haven't really covered it. But broke, I don't know, last week as we were going to Miami or something.
The show.
Ledger co-founder and former CEO, this is the former CEO of Ledger, admits that governments can subpoena access to your funds when using Ledger Recover service. So if you are a Recover user and have shared into safeguarded by third parties, then yes, a government could subpoena them and get access to your funds. Basically, this answer to your question. Bottom line, this was a firmware update that is accessible on the Ledger device. And see, I think Charles had some pretty good takes on this. Is Charles Hoskinson. With respects to the Ledger controversy, I say the following: always choose open source software whenever possible that has been audited by numerous sources on a regular basis. 2, security comes from simplicity. Design the smallest possible footprint. I think that's really, really good advice. You guys can kind of think about that and do with that as you will. But the more complex you tend to try to make your security, the more potential attack vectors it could have. So simplicity is almost always the best design when you're trying to be safe. non-updatable firmware. Now, this is the main issue that the Ledger hardware wallet had. Now, obviously, it needed updatable firmware if you want to continue to add new chains and new coins. So this was they were trying to do what they thought their user wanted, but the number one, kind of the unique selling proposition, the main reason people had a Ledger device was its separation. So it is scary to think this was there the whole time, but non-updatable firmware is important when a company makes specific promises about their security model. YubiKey, for example, follows this concept. While it would be difficult to replace this idea for cryptocurrencies, decentralizing the process of updates would greatly enhance the security. Number 4, people buy hardware wallets to maximize the personal security of their funds. They don't buy them for daily use or expect an equivalent user experience. I think this is what Ledger fell into. They were trying to provide two things. They were trying to provide the convenience of a hot wallet while the security of a cold wallet or hardware wallet, and unfortunately it's kind of put them in a position where they're not doing either. The hardware wallet space is the most extreme example of self-custody. We could just as easily PGP encrypt some seeds and leave them in Gmail, which we choose to use hardware wallets because they guarantee that private keys stay in one place on hardware that's hard to tamper with. Don't break the social contract. So I thought that was just a good way for yourself to kind of self-analyze, look at, is the provider I'm doing all of these things? There's all sorts of things you can do. You don't have to use a hardware wallet. You can use if you want to take an old cell phone, an old smartphone that's no longer connected to the internet, or preferably one that's never been connected to the internet, but still, if it's secure enough, you get an old cell phone that isn't, no longer has cell phone service. You have to turn the Wi-Fi on to do anything. And then you can just run plenty of software wallets on that device, have all sorts of different things, keep it separated from the internet at all times. It's not 1000% as secure, but it's pretty secure. It's pretty simple. So if you guys want to try that, something to think about there.
Nick, the chat is saying EliPal.
Yeah, EliPal is
EliPal?
good. I haven't used it. SafePal is great. I have used it. I don't like the Keystone wallet because they're partnered with MetaMask, and MetaMask is going to take taxes out of your account.
Wow.
Yeah, I saw that. That was
Yeah,
interesting.
yeah. The other one, it was white and gold and was more angular. The guy was on Twitter, so yeah.
Hey, TJ, did you ever answer what was your favorite part about the conference?
No, I didn't. I loved, I always liked the conference. I probably just seeing old friends and catching up with other people. I did. I know you're going to give me a hard time because we played pickleball while we were down there. Shout out. I think his name's Mickey Collins.
Yeah,
Shout out to Mickey. There was a place nearby the Bitcoin Center where we were playing pickleball, and it was really fun. We played for like 4 hours.
Aaron got eaten alive.
Yeah, Aaron got eaten by the mosquitoes. He was kind of waiting for Brian and I to finish up. It was definitely hot out there. Weather was good. Yeah, I had a good time. I really enjoyed, like I said, the art. I think was probably some of my favorite stuff. Seeing Iran, seeing a lot of old friends. That's the main kind of reason. Shout out to Gaston Cruz wasn't there. He's one of my favorite ones to see. He didn't make it this year, but I'm sure we'll see him next year. Ran into a lot of old friends. So, always a good time out there.
There was one little moment I thought was sweet. TJ was walking down the street and a guy was pushing his baby.
Yeah.
And he says, and there's TJ
Yeah.
as TJ walked by.
So he was talking to his baby, telling him all about the conversation. He's like, there's TJ. And I was like, wait, what? And I look up and he's like, hey, we like your videos. Keep up the good work. And I was like, oh, thanks. So yeah, that was funny.
Pretty cute.
So yeah, we had a really good time. Let's dig into this, and then we'll talk a little bit more about ordinals because this touches on the liquidity stuff. But 5 things to watch in Bitcoin this week. Like I mentioned, after precious little activity over the weekend, the largest cryptocurrency lacks direction. Even macroeconomic triggers have failed to shift. Around 10% below the $30,000 mark. BTC, blah, blah, blah. Where's the liquidity? Binance spot trading performance is giving traders a headache, not because of volatility, but the lack thereof. There's literally no liquidity no volume or volatility right now. In what feels like an unusual state of events, BTC USD is acting within a range of only a few $100s with nothing that has been able to change the mood. Even the last week's remarks from Jerome Powell, chair of chair of the Federal Reserve, were not enough to send Bitcoin definitively higher or lower. Traders are thus increasingly on the sidelines. If we lose 26.6 and close on a 4-hour candle closure, I will look to short. Yeah, I know Frank is leaning short right now. I would just on a gut and experience side be leaning short. Bears took us to support, but they think they can take us and close below now. According to the data from Decentral, I moved to 25.8. Yeah, there you go. That's about right. 25.8, 25.2. I think we could even go lower than some of these numbers. Post bear market similarities like this 2014, 2016, 21 through 23. Let's look at this chart here. Yeah, so you can see, this would be if we went back and retested this bottom. So this has this potentially going all the way back down to 20, which would be consistent with what we've done in the past. I think this is the part, I was talking with Frank about this before the cycle. This is in 2019. This was the part where people just get bored to death. They think there was something coming back. There was a little rally. You got a little excited when it buzzed. It went above 10K up into the 14K range, and then it fell between 7 and 10, and volume was right around where it is now for a very long time. So no price acceleration, no fundamental growth. Classic choppy pattern in terms of volatility. Bitcoin is now in its quietest since the start of the year. Here, let's see how far back this. No, it only goes back. Yeah, so you can see it's just completely fallen off. I mean, it's basically the volume is very similar to where it was when everything absolutely bottomed out. I mean, here's where everything stopped while, when everything Terra Luna, Celsius, FTX was crashing. And then, the volume, here's the volume of the crash, and then the actual price bottom. Yeah, because you can see here's price crashing. Everybody sell. Nothing. Price was going back up. Volume was going back up. But now you can see volume compared to price is absolutely falling off a cliff, even though price is going sideways. So I think this is something we could probably see play out for the next 6 to 9 months. I
think that was a volatility measurement, not the volume measurement. So it's showing, it's getting down to the point where we're actually getting into it's kind of like if you look at the Bollinger Bands when they constrict very tightly. So it's likely at some point here, and everybody's thinking, especially if you want it to go up, volatility is good, but volatility is good for making money if you know what you're doing in the market. But volatility could also mean that we have a washout liquidity wick down to $23,000 or something like that.
Volatility, goes both ways, goes to the upside and the downside. And it's interesting. People were so sure we'd see a pause, and now we're already seeing PCA data forms weak macro. Trigger set to increase May 26th. A slew of economic data, including personal consumption expenditures. It looks like as of May 2022, the odds high at around 86%, according to CMA Group's Fed Watch tool, that the next decision policy due for another 3 weeks. So saying basically now there is chance of another hike on the table. Before this was 100% of pause, which obviously it's not 100%, it still seems to be leaning very heavily towards a pause, but we shall see. Short-term BTC holder profits trends towards reset. According to the figures on-chain analytics, the proportion of supply active within the previous 3 to 6 months is now at a 3 months low. Again, so do people going back into dormancy. Earlier in May, Gladstein noted that such a reset in profitable tends to offer significant price support, meaning if people took profits and were profitable at this level, generally they're not going to sell below that level. Should a deeper market correction develop, a price of 24.4 level would bring the short-term holder MVRV back to even of a 1.0. Let's look at this. So here's black is the price, and then the short-term holder MVRV. Yeah, interesting. Okay.
So essentially what we have right now, short-term holder cost basis, which is essentially the average price of every coin on network that's moved or been bought or held by wallets that spend on average within a 155-day period.
Right.
There's a much higher ratio of coins not being held through volatility for short-term holders. So I kind of, on an on-chain metric I created, I actually labeled the short-term holder cost basis as a pretty strong trend signal line. And when you have price action that breaks above the short-term holder cost basis, you tend to get pretty strong bullish movements afterwards. And throughout where we're at right now, we have broken above it, but it's very likely that we're going to go back down and test it, which is interesting. It's right at the level that everybody's watching, that 24.8 to 25.5 level. So while that could be scary, when you're trading emotionally, it's actually, it would be incredibly healthy for the price to come back to that level and reconfirm, especially with all the uncertainty on the global market. If we come back and hold in that region, I would say even if just below at 24 or above, we're setting up for a monster 2024.
Absolutely. Yeah. I mean, that's what I'm saying. There's macro and, economic and on-chain stuff, and, the halving, all this stuff lining up between 2024 for it to really be a monster year, which is always so fascinating to me, that say all this regulation stuff and war stuff and geopolitical stuff is going to also time up perfectly with the halving, time up perfectly with an ETF getting approved and all sorts of these other things, and then boom, we're off to the races again, and then we do it all over again. Price over speculates in 24 and 25, comes all the way back down in 26, and everybody says it's dead again, and and here we go. So real quick, we'll finish this up for things to watch this week. Whale BTC price influence lessening. The latest Bitcoin price dip followed the long-term holders, capitalizing on the year's highest profit ratio, over 34%. Furthermore, so this is kind of the opposite of what Kelly was just talking about. These are the long-term holders, not the short-term holders, taking profit. All market players managed to realize profits exceeding 7% on average. It commented on the marketplace participants. So the big whales took their profits. They make a lot less moves, so that's just another reason, that could be some of the volume drying up now if they're done. And always good to check in on the fear and greed index. The fear and greed index matched 2-month low at the end of this week, now below 50% midpoint, and markedly unlike its competition at April 30 for the local $31,000 BTC top. So it was spiking up. Now it's starting to fall back down. Still 50. The midpoint's still a little on the high side. I mean, you want to be generally buying in peak fear and 40s and 30s. I mean, it's gone as low as 7 and 12 before it. And again, this is just a social metric. This isn't, don't trade 100% on it. But if you see it in the 7s and the 12s, that's almost always a good time to buy. With Bitcoin revisiting the 26K level, traders are showing increased worries of the price falling back to 20 to 25K range. Research from Sentiment shows. So that was a lot of stuff we just talked about there. So, all right, let's talk about real quick. Let's get you ready for BTC Summer Part 1, BRC20s. This is showing the, here we go, the spike in fee price on the Bitcoin network and what miners are beginning paid. It's a good time to be a Bitcoin miner, I will say that. So let's get you ready for this. This is a long thread. I'll retweet it so you guys can kind of read it on your own time. I'm just going to skim some of this. He's going to go over a little backstory. The Ordinals, also known as Bitcoin Ordinals, are a recent innovation that allow for permanent and immutable inscription of data on the Bitcoin blockchain. The technology was, we'll skip that. This innovation became possible due to 2 major upgrades on the Bitcoin blockchain, SegWit in 2017 and Taproot in 21. These updates increased the block size 4-fold to reach 4 megabytes, providing enough space to accommodate the data recorded on the Ordinals. Inscriptions on Ordinals are often compared to non-fungible tokens or NFTs, but they do have differences. Right, they're kind of like NFTs on Bitcoin, but they're not the same. The way they're created is different. He calls them digital artifacts and emphasizes that they are self-contained, unlike NFTs, which generally link to content hosted on other platforms. That is correct. This is all stored on the Bitcoin blockchain. Additionally, digital artifacts are permissionless and immutable, whereas NFTs can be sold with fees and royalties. A comparison between them: unlike ERC20s, which operate with Ethereum, BRC20s don't interact with smart contracts. The standard relies on a method of storing a script within a Bitcoin and using it to allocate tokens as Satoshis. All right, so let's dive into it. To buy, okay, so now he's going to explain how to do it. So I just wanted to give you a quick context of what it is. If you guys don't know what inscriptions are, there's a lot of conversations about it. What's interesting to me now is it's starting to open up kind of a box of new things. You can call it attacks. I mean, people were freaking out when it was first starting to get clogged up on the Bitcoin blockchain. People saying that, oh, this is an attack on Bitcoin. I don't think it's an attack. I do think this is something that was always going to be tested and tried. This is something we need fees to go up. It's going to be interesting to see how it plays out. But now there are a lot of other things they have to consider that Ethereum's had to deal with on a development and on a kind of a architecture standpoint that Bitcoin hasn't. So it's going to be really interesting to see if this turns into a short-term negative thing, a short-term positive thing. I do think long-term it will be positive, but there's going to be some interesting stuff that happens in the middle. So I have a clip here of Eric Wall talking with a couple other, I think mostly Ethereum developers that I'm going to play here in a second, that I think is just interesting. And he presents that same issue of like the MEV problem, basically, of what you're doing on Ethereum starting to run into similar issues on Bitcoin, because now it's not. Remember what I was saying about simplicity being key earlier when you're talking about security? Now it's Bitcoin is not as simple as it once was, and because of that, it's opened up some of these other potential issues. So let's see.
TJ, do you want $1 billion idea? And I'm not even kidding right now.
$1 billion idea? Sure.
$1 billion idea. Okay, so $1 billion idea is as follows. We know that Litecoin is going to be getting ordinals soon. What else is on Litecoin? What is a fork of Litecoin? Dogecoin, the original meme coin. If we can find a developer to make an app on your phone, like IMG Flip or something like that, where you can make your own NFTs and then mint them on the Dogecoin chain, bruh.
That's pretty interesting.
That's
yeah, like a Doge ordinal, basically.
A Doge?
Dorginal.
Dorginal.
Yeah, we can come with some cute name for it, but like Yeah, some type of
I like it.
Doge treat. You can call them treats, right? Because Doge is like treats.
Yes,
Yeah.
Doji treats.
Doge treats. So you make a Doge treat, you do it on the app, it's inscripted right on the Dogecoin blockchain.
Little Doji biscuit.
It's dude, that is 1 billion. That's Tres Comas.
Yeah, no, I like it. We'll come back to that. So this stuff is, I know a lot of you guys, some of you are newer, some of you are really into this stuff. I know some of you mine. So it's a little bit more technical.
Call Elon.
If you guys understand mining, this will probably make more sense to you when they're talking about inscriptions and some of that sort of stuff. If not, just listen along and this is a little bit long, but I think it's really good. So just check it out.
The thing is that when you make it this easy to embed arbitrary data into Bitcoin, there are more things that people are going to want to do with that arbitrary block space. So one of the things that people have been doing for the last couple of weeks is they created a meta token protocol. So the BRC20 standard it's a semantic, it's a bunch of JSON files that people dump into the Bitcoin chain. And then you have external software that sort of interprets those JSONs and creates now a BRC20 token standard inside of Bitcoin. So you basically have a shitcoin protocol that is now living inside of this arbitrary data space. So I don't think that people yet can see sort of the danger here, but there are already people that are working on extensions for the BRC20 protocol to add things like, because now you can create a shitcoin inside of Bitcoin. It's not that new. I mean, you have the Omni layer, for example, did that in the past. But now that there's been sort of a huge, tremendous interest in these, and these BRC20 tokens have had tremendous market demand, and they're worth like hundreds of millions of dollars, and there are people that are minting them. What's the next steps for these tokens? Are they just going to be dummy tokens that you can't do anything with? No, people are going to want to start trading those. They're going to want to start trading those on automated market makers. They want to start to get yield on those tokens. They want to use them in governance systems. They want to use them in the same way that people use any token in DeFi. So
this is your bear case? This is why it's bad to have BRC20s?
Yeah.
Okay,
So
why is it bad?
I'm getting there. So, so what's gonna happen is that there's gonna be MEV on Bitcoin. What was the reason that
Maximum extractable value.
The block producers in Ethereum were censoring transactions due to OFAC regulation in Ethereum? What was the main root? What was the main source of that problem? MEV was the main source of that problem. Because of MEV, we had to create a system like Flashbots in order to democratize staking yields, basically, in the system. So we created a different type of pipeline for transaction propagation and transaction creation in Ethereum in order to make sure that all different validators in the system had sort of access to high yielding block creation. But that did also create centralized pipelines inside the system so that when OFAC regulation came in, they had a specific entry point to sort of latch onto.
Real quick before he keeps going too far, part of why I want to play this for you guys is I want you to start to understand some of these issues are why I say this stuff's going to take a lot longer than you think it's going to take. Like, yes, conceptually, theoretically, this stuff's going to change the world really fast and all this great stuff. But the details, and this is, and I know a lot of you guys, I know you, some of you may know this already, some of you may not, but watching conversations like this of actually making the pipes big enough to put the data through in a safe way that isn't open to censorship and permissioned access, which is what they're getting into here. This is why this stuff takes time. It moves extremely slow. And even though we can theorize about where this is going, it's going to take 10, 15, 20, 25, 30 years for all of this stuff to play out. Just like in 1992, maybe 94, 96, people were conceptualizing being able to do video chat over the internet. It took 20 years for them to be able to put those video files through. So this is some of that when it comes to data on a chain and scaling issues and attack vectors. You know, he's talking right now about some of the stuff that they've already had to problem solve on Ethereum that now is potentially going to be an issue on Bitcoin. Yes, it's going to create new opportunities and interesting things on Bitcoin, but it can also slow things down. And these are now new complicated problems to solve.
And that was the reason why we reached 80% centralization in Ethereum. So
yeah, it's done a lot from there for what it's worth. I think Flashbots is only like 25%. And you guys don't have to build Flashbots. You can just spike the fees forever and pay your miners that way. Like, I don't think it's fair to say MEV causes OFAC censorship.
No, look, well, if we don't do it,
but it did. It did cause it. He's not saying it. Like this is a direct cause. He's saying this. It's a cause and effect. It did cause that. It creates a central point of attack, which he'll get into.
Anything, then it means that the miner who is the most prolific in extracting MEV in blocks is going to become the biggest mining pool. So one mining pool who's way better than everyone else at doing sandwich attacks and back running and front running now can provide mining yields that are 30 times higher, 40 times higher. And we're talking about one of the most competitive, like it's even worse than in staking, because in proof of work mining, everyone is sort of breaking even or dying. So you're going to have to join the most profitable mining pool. And if the most profitable mining pool is one that is very talented at extracting MEV, has the access to the best searchers, and sort of can do multi-block MEV across many blocks, then you do get a situation where hash rate sort of centralizes around a single mining pool. And that's why you have to invent things like flashbots to make sure that any mining pool, whoever they are, have access to equally powerful block creation strategies so that it doesn't centralize. I mean, I'm not saying for sure 100% this is going to happen. I'm saying that the whole domain of problems that the Ethereum system has been fighting with for years, and Bitcoin has sort of been isolated from that, all of that crap is coming back into the Bitcoin system. And the current Bitcoin core developers, like, sorry to say it, but they don't have any idea about how MEV works. Like, they have some very primitive ideas, some primitive understandings of how MEV behaves and operates, but it's like it's kindergarten time, it's amateur hour in Bitcoin compared to all the lessons that you guys have learned in the Ethereum lab.
Yeah, so I mean, it's a lot. That's a lot to digest. I just figured I wanted.
So TJ, is it possible that Udi and Eric didn't quite think this thing through all the way?
Sure. Yeah, of course it's possible. I mean, yeah, of course it is. I mean, that's part of the ethos of crypto a little bit. Move fast and break things, right? Sometimes you move fast and break something important. You know what I mean? So
I thought that was Facebook's ethos.
Is it true they didn't think it all the way? Possible that they didn't think it all the way through? Sure. It's like saying, is it possible they didn't think all the way through the Taproot and SegWit upgrades? Because that's what created this. It's not. Yeah. It's not them doing it that created it. Somebody would have discovered this at some point in time. And that's the fear of any upgrade. It's the unintended consequences, because this was not the purpose of Taproot or SegWit. It was trying to create an improvement to Bitcoin. And I think what this will really do is call into question, because, and this is, I would think most Bitcoin maximalists would agree with this, the number one value, unique value proposition of Bitcoin is the fact that it doesn't change, right? That's why they would say the 21 million hard cap will never change, even though theoretically it could reach consensus. It never would, because that would undermine the number one value of Bitcoin, the fact that it's the same and we can trust it as a store of value. I think this will, I would imagine, dramatically reduce any speed of any Bitcoin improvement proposal going forward, because these two, these SegWit and Taproot, were the only Bitcoin improvement proposals, I think, in my mind, since 2017. I think any major ones, there might have been some minor ones, but major ones in many, many years. And it's already created this whole issue now that they're going to have to solve. So yes, it's possible people didn't think this all the way through. And that's why it's all an experiment. That's what, everything we're doing in crypto is still an experiment, because there will always be new tests and new iterations. And that's why time and the longer Bitcoin exists and maintains an uptime is its value proposition. So I think, if I was a Bitcoin core developer, this is a lot of motivation for no more changes to Bitcoin, because it's doing what it needs to do. It's operating the way it needs to operate. Any more tweaks we make just creates more potential attack vectors that we may or may not be prepared to, deal with. Right now, the number one is mining, power, that sort of stuff. That's one thing that's tough to centralize, but they're fighting against it. But if you're starting to look at that scenario he just laid out right there, and Solar Mining in Spain said F2 Pool would definitely be guilty of that. They've done it before with ETH, and it's 100% true. If the opportunity and the incentive is there, people will do it, and it's just a matter of how do we solve it. Now they have somewhat solved for it on Ethereum, and just because there is an opportunity to run a certain attack doesn't mean it can't be defended. And so that's where we're at right now. We have to trial and error, and this is very and somebody says Fluffy the Sheep says if it ain't broke, don't fix it. And some people would say that's true for Bitcoin. Some people would say Bitcoin's broken, it's too slow. I mean, and it just kind of depends on where you land on that debate. I land on really they shouldn't be messing with Bitcoin too much. If you want it to be a reserve, if you want it to be the global reserve for the digital world or even for the physical world, it needs to stay and maintain exactly how it is, so people know it will be the same 100 years from now as it is today. If they don't know that, then you have a lot more potential for inflation and loss of trust. And I think Ethereum, on the other hand, is taking the other angle where we're adapting, we're growing, we're tweaking to be the best thing for the space that we can be. We're not trying to be the same forever, but I don't know. That's my take. What do you, Nick? I know you're deep into the mining world, proof of work. I know you were very anti Ethereum when they switched over to proof of stake because of some of this OFAC stuff. Where do you land on ordinals, on some of this sort of stuff?
It's just a gigantic waste of time, and once I saw the irrational exuberance take over with Udi and Eric and the rest of the ordinals crowd, I'm like, okay, well, they're not thinking anything through anymore. They're just like in this kind of like euphoria of we're making other people. It was a very middle school mindset of like, oh, we're making all these people super mad and we're trolling people, and so we should just continue to push forward. And like no one thought it through. Eric is a thoughtful person, and it's kind of like too little, too late. Yeah, like, oh yeah, maybe you should have thought about this stuff. Maybe like brought up the idea at Bitcoin Miami this year, and actually thought it through with some. It's like a collective of thinkers before pushing it out, because now it's out of the bag and you can't really. What are we going to do? Fork Bitcoin again? I don't think that's going to be happening anytime soon. So yeah, it's just poorly thought out, and I've been against it since day one. But I think ultimately Bitcoin will recover. But it's just, again, like you said, an attack vector that the government can use. And yeah, so now like all the S coins have been on Ethereum. Well, according to Eric, now we can get a whole bunch of S coins on Bitcoin, and you bet your ass there's going to be an MEV ASIC coming down the pipe. Okay, so
but in my mind, how does that not push everything forward? How does that not? Now we have to solve for these problems. Now we have to, because the problem they didn't create the problem. Taproot and Segwit did. And so now the cat's out of the bag. Now people are going to try to be using that to their advantage. But all that does is bring more value, more attention, and more network activity to Bitcoin, in my opinion. So I think what that does is it allows Bitcoin to become more robust through this maturation process.
Yeah, the timing's terrible. If the government didn't care about Bitcoin and crypto right now, it'd be like, yeah, we'll work it out on our own. But Bitcoin has a target on its forehead right now. So this is just another way to keep Americans, and you want to have a complete ban on hardware wallets, then keep it up, and that's what will happen in the United States. Hardware wallets will be contraband. Full stop.
What is I don't see that connection.
Okay, so the U.S. government will take this as an opportunity to label Bitcoin a playground for S coins, for market manipulation. Now that Bitcoin is no longer just the coin, it can have all of these other things on there. And I've said this since day one. If you can mint a JPEG on Bitcoin, you can also mint sexually abusive images on Bitcoin. And now Bitcoin becomes the pornography chain. And so anything that can hold Bitcoin becomes contraband. So hardware wallets and soft and or hot and cold wallets will be contraband. That's an attack vector. That's just an attack vector. So
it's interesting. That is a point there I hadn't thought about. Kelly, do you have any thoughts on this?
Yeah, I was talking with the Rational Root about this, and I was, kind of picking his brain about it, because on the one hand, I agree with what Nick's saying. On the other hand, it's like, we're early enough in the development that we do have to be worried about what the restrictions that could be formed around it, because what the restrictions and regulation that get formed in the next 3 years is going to have a huge impact over the next 25 years or 50 years, right? And so we do want to make sure that we're not putting a larger target with instead of a pellet gun, but actually a bazooka aimed at us now. That is something to be considered. However, on the other hand, if we look at it just from a developer standpoint, it is forcing the network to consider how it can mitigate issues with throughput, right, and bandwidth, and being able to run effectively. Let's say when the adoption really comes in, and we have to deal with those things. And then an additional side of this as well is that because of that, it actually pushed the miners' fees over a point to where it was an interesting sort of thought experiment to figure out how miners are truly going to make money in a meaningful way once 2140 when all the Bitcoin's mined. And this is sort of given an interesting different look at the because of the congestion on network has driven fees up. That actually shows what's the word I'm looking for, not positive, but basically profitable nature through the fees of transaction separate from the mining rewards itself. So I don't know what the answer is here. I think we do need to come together as a community, especially people that are involved in the Bitcoin mining side of it, because they're the ones that really have to come to consensus on what things are being done. But it is supposed to be the most democratic thing in the history of any monetary asset ever.
If you ask a Maxi, they specifically say Bitcoin is not democratic.
Yeah.
I've been told that like 5 times this past week.
Yeah, I mean, you made a lot of really good points there, Kelly. It is, in my mind, when it comes to a good time to buy Bitcoin, there's a lot of uncertainty right now. I feel like this is fear, uncertainty, and doubt floating around there. There's a lot of fear, there's a lot of uncertainty, and there's a lot of doubt. I do know this Bitcoin has gotten stronger and more resilient each time through the cycle. It's gotten more secure, and all throughout my time of learning and understanding Bitcoin, I have a lot of. Now, I know they say, trust, don't verify, or verify, don't trust, don't have faith. I do have a lot, for better or worse, do have a lot of faith in a lot of the Bitcoin core developers and a lot of the people behind this, that decentralization is important. And this is something that matters to them. So I generally look to accumulate and buy when fear and uncertainty is at the highest. I remember 2019, there was a lot of stuff floating around about why Bitcoin was going to completely go away and go to 0.2. So I firmly believe these next 6 to 9 months, we're going to be in a pretty, one of the best buying opportunities we can be in. If, assuming you weren't around in 2019, assuming you weren't around in 2015, 2016, accumulating then, which if you're watching now, I would assume you probably aren't, because if you were, you'd probably be off on your yacht somewhere. But that being said, this part of the Bitcoin cycle has always been the best time to be accumulating Bitcoin. And it doesn't surprise me that we're seeing a lot of fear and uncertainty and doubt during this phase of the cycle. Once we move into 2024, I think it's going to just be win after win after win, whether it's a technological upgrade, whether it's, the printers back on, whether it's pro US regulation. I think all of those things are going to be happening in 2024. Then we get the Bitcoin halving. It's party time again. So hopefully all of you guys are accumulating right now. That's what I would be suggesting. Crypto Stevo, I think that's called a lap desk. They were asking what Allison had on
He
her
might
lap.
have been talking about the blanket,
No,
which
I think
is
he's talking about this.
Oh.
He's talking about the
That's the limited edition blockchain basement.
Look, if you didn't
this
go to
is blockchain basement blanket.
we do have a blockchain basement blanket, but so I would say, guys, I'm looking at Bitcoin right now. If it pulls back to 20, I know I'm going really hard. I've told you guys this the entire existence of this channel. Anywhere, in my opinion, anything below 20 is an extremely good buy. Anything close to 20 is a really good accumulation range. Still think we're going over 200K. Will these fees and some of this stuff help push us there faster, or will it slow it down? That's the question. I think in my opinion, I think it brings more activity, more transactions, more attention to the network. I do think they will figure out how to solve for some of these issues. But yeah.
I had a question from the Deadwood. Will fees cause ETH to be considered as a storage of value like silver, or continue life like diesel and provide the base for everyone's work with continual fluctuations in fees according to demand?
I would say up until this point, most people look at it more like diesel, like an oil than a silver, gas. If you think about it, they call it gas for a reason. Now, I do think the cost will go down dramatically as it scales and the layer 2s and some of this stuff kicks in. But again, that's going to take a couple more years. But yeah, it will always be there underlying. But so I don't see it as a store value. You got to remember, there's also no hard cap on Ethereum as well. So
TJ, if you had to describe very quickly, what's the difference between stacks and ordinals?
I probably couldn't do that. I haven't dug deep into stacks. I know what block stacks is, but I would say I know more about ordinals than block stacks. I know, but I don't really know enough about stacks to really tell you. Could you answer that one, Nick? Stacks?
I just have a tangential understanding.
I'm pretty sure block stacks does more with smart contracts, right?
Oh, for sure. They are like
ordinals has nothing to do with smart contracts.
Yeah, there's essentially a layer 2 to Bitcoin.
Ordinal is just an inscription of data, getting you a specific Satoshi.
Yeah.
Block stacks, I think, is more focused on smart contracts on Bitcoin.
Yes.
But I don't have a deep understanding of that, so I can't really speak to it.
That's it.
That's the difference.
That's pretty much it. Yeah.
So, all right, guys, really appreciate hanging out with all of you. We love you. The Deadwood, Manawak, Crypto Anon, Crypto Stevo, Mike Bennett, Robert Young, Solar Mining in Spain, Fluffy the Sheep, Crimson Caravan Company, Dago, Digital Soldier, of course, Drew. I didn't ask Drew enough questions. Drew on the board. He was very quiet today. We had Elliot visiting with us. Wave, there he is, Elliot. He was down there in Bitcoin Miami as well. The lovely Ali Lee, Kelly on the couch, the Nictator. I'm TJ, Blazing 2JZ, Manawak, Dan Morrison, Crypto Anon, Crypto Teutonic. We love all of you guys. We'll see you back here tomorrow. Will
See you at
Yum
the
Yum.
top.
Bye, Bitcoin.